At the beginning of this school semester, we wanted to see how effective it was to choose a set of stocks as our baseline, with technical analysis and swing trading as our methods to see how effective they were. We made a $10,000 paper trading portfolio that we wanted to invest and grow throughout the semester. Before we get into it, however, we want to define technical analysis. What is technical analysis? Technical analysis is the practice of forecasting a price on a stock based on their movement on graphs, indicators of increase/decrease in price, and historical behavior. For this project, we relied on four main tools: moving averages, to identify trend direction, RSI, relative strength index, to spot overbought or oversold conditions, support and resistance zones, where areas usually have an effect on price, trend lines, to identify breakouts or reversals. We're also letting SPY represent the S&P. We started with putting $10,000 of SPY at $637 on August 20th as a reference. On August 22nd, we bought UNG for $11.91. The reasoning being was that we saw a big double bottom indicating increased probability for a reversal. Also, the simple moving average, SMA, was at $16.76, meaning the price had an inclination to go up. We sold on October 1st for $13.62, which brought our total profit to $418.30. Next, we tried AMD, as they had a very clear bull flag and 24 candles inside the pattern, indicating an imminent breakout. We bought it on September 12th at $155 and sold on October 6th at $203, one of our strongest technical setups. Target was another stock. We bought it on September 22nd at $85.48, as we saw a double bottom and retest of resistance that had not been touched since early April of this year. We sold it on December 2nd for $174.90. We also bought Dell's stock at $140.24 on October 3rd, as it had a high volatility breakout through a trend line, followed by a clean pullback to retest the same line. We sold this one on October 8th at $163.95. All of these sound positive, however, the market isn't always so easy to read. On November 13th, we bought Coinbase, for $283.14 as the price was hitting both the 200 simple moving average and a supporting trend line simultaneously. But we weren't able to make a profit out of this one, selling it at the loss of $210.60 on December 2nd. Another loss we had was the JD Trade number 1, which we bought on October 8th at $34.98 as it was touching a major support line with strong risk reward. We ended up selling it on November 13th at $30.54, a loss of $380.90. The losses didn't affect us too badly as we still kept buying and selling more stock, like Amazon, which we bought for $222.55 on November 13th because of a sharp pullback approaching the 200 MSA and a supporting trend line. Sold on December 2nd for a profit of $158.40. And finally, for JD Trade number 2, we bought it at $28.88 on November 19th as the price had hit the bottom of a parallel channel, meaning another strong support zone, and we sold it on December 2nd for a profit of $98.81. Overall, after closing all positions on December 2nd, our trading account ended at a final value of $11,679.62, with a total return of 16.796% compared to the benchmark of SPY's return of 8.04%. This means that our technical analysis strategy outperformed the market by roughly 8.75%. Here are the results of all our sold stocks. UNG bought at $11.91, sold for $13.62, plus 14% or $418.30 profit. AMD bought at $155.67, sold for $155.67, plus 14% or $418.30 profit. Sold for $203, plus 30% or $912.81 profit target, TGT. Bought at $85.48, sold for $90.47, plus 5.83% or $173.90 profit, Dell. bought at $140.24, sold for $163.95, plus 16.93% or $507.90 profit. JD trade number 1, bought at $34.98, sold for $30.54, minus 13% or $380.90 loss Coinbase, bought at $283.14, sold for $263.26, minus 7% or $210.60 loss. AMZN, bought for $222.55, sold for $234.30, plus 5.28% or $158.50 profit. JD trade number 2, bought for $28.88, sold for $30.04, plus 4.02% or $98.81 profit. Conclusion. So, based on our results from our experience with our paper trading portfolio, we would say that the technical analysis strategy can beat the market at least over the short term. We significantly outperformed the SP 500's 8.04% by doubling it to a great 16.08%, showing that with some discipline and with the right setups, technical trading can outperform passive market exposure over a controlled period.